Long-term care. Whew, what a topic. What is out there anymore? And so, Aaron, as we go through this, long-term care is such a sensitive subject for most, just because it's a reality that many families have had to deal with. And here's what's crazy. There's a lot of transition. The world we used to know, Aaron, when you and I started in the industry many, many decades ago, there were certain products that were just your kind of Cadillac kind of go-to products that aren't even there anymore. And so, Aaron, we get this quite often in our family discussions today. What else is left?
That's a great question, Grant. As you mentioned, I started in this industry in 2005, working for John Hancock, and long-term care was a staple of John Hancock at that time. And I think there's Northwestern Mutual and Genworth, and there's just a lot of big name insurance companies that were a part of traditional long-term care policies. One of the bad bets that the insurance companies made is they thought they would, just like normal insurance, they thought their insurers would not keep their long-term care policies. And so like auto insurance and homeowners insurance, those get shopped around. Well, people actually held on to their long-term care insurance, and they were used as they were sold. And so the insurance companies started to realize, hey, we're really losing money on this. And so long story, just to get back into the topic of the long-term care, what is out there. A couple things that we talk through with families is there's a few ways to look at long-term care insurance. The first way is just self-insurance. So you've built up enough assets, you've got money set aside that can pay for that cost of long-term care, so you would self-insure. The second route would be the alternative to that is going the Medicaid option, meaning that there's not enough assets that would be able to cover your long-term care. So you go down on a spend down program to where you're spending down your assets so that Medicaid could step in and start to pay for the long-term care need. There's two other options. The first that Grant and I mentioned is going by the wayside. There are still some companies out there that will do a traditional long-term care policy. Those companies are shrinking, but a traditional long-term care policy is purchasing that for exactly long-term care. You set it up with elimination period, sometimes 90, 180, maybe 365 days. It shows you what your daily benefit is, and if you're lucky enough, you could have some compounding to where your benefit grows over time. Again, those are starting to become smaller and smaller, and what is more prevalent today is a hybrid form of life insurance with long-term care. And so how that works is you buy a life insurance policy with a long-term care rider. And the way that they work in the most basic form is, let's say you purchase a $300,000 life insurance contract and you pass without needing care. That $300,000 would then be paid to your beneficiaries tax-free. Now, on the opposite side of that, if you do need care, how they work is generally you get 2% of the death benefit for a monthly need. So 2% of $300,000 would be $6,000 a month, if I'm doing my math correctly. 6,000 times 50 would be 300,000, meaning that you would get $6,000 a month for up to 50 months worth of coverage. Now, in most cases, that $6,000 a month is not going to cover all of a full-blown long-term care need, but it would help cover quite a bit of that cost. Let's say you're halfway into it using long-term care, and then there's some death benefit left. That would be paid out, so the policy is not being wasted. The downside to that is they're traditionally more expensive because you're going to use it one way or the other. Either you're going to pass away and it's being paid out in a death benefit, or you're going to use it for long-term care. If you do have questions about, do I need long-term care? Can I self-insure? What are my options? Grant and I, when we talk through these situations with families, the one thing with long-term care insurance is it has to be underwritten medically. So if there's health issues, if you've had instances of maybe a cancer scare at some point, we have to go through an underwriting process. So if you're considering long-term care, the sooner you consider it, the better, because as you age, it becomes more expensive. So if it's something that's on top of your mind, do we need it? You have a grandparent that went through a long-term care need? Maybe you're helping a parent through long-term care now. If that's something that you're considering, please reach out to us at 800-928-4001. Any member of our advisory team would be happy to help you walk through that from a fiduciary standpoint, looking at what is in your best interest. Thank you so much for watching. You guys have a blessed day.
If in our conversation today, something was sparked deep inside you and you feel like you want to evaluate your current financial journey, please click the link here. We'd love to schedule a complimentary meeting to sit down with you and navigate the potholes that may potentially be lurking around the corner in your financial situation. One of our talented team members will help you figure out where you are, figure out where you want to be, and then give you key critical things that you can think about today and tomorrow to make sure your financial journey remains intact.